Good day, folks. Welcome to Week 8 Financial Statement Analysis as we're running down to the last 7 weeks of the class. Wow, has time gone fast. The modules this week, you should be finished Module 5 on IFRS. Module 6, there's 2 pages on normalization and one-time items. You have into next week to get them done. Project 2 is now worth 18 points and is due no later than April 1st, 2021. Take this week to finish it up. Okay, we're going to have some warm days, but it's going to get even warmer, so try to get that done. The second quiz is now 15 points, and that's on April 24th. The instructions are now posted for Project 2, and it will take you a couple of days to do. You need to integrate it. Okay, it's part 1 and part 2 come together in a logical format. Create an audio or video overlay. So that's Project 2, something you should be working on. As far as our current events discussions, most of you have an article at this point. Please let me know when you're ready to have the discussion. We need to get this done by April 25th. If I didn't send you one and you want to present in the next 2 weeks, just reach out and let me know. And again, as I said, we need to complete this by April 25th. So we have substantially everything done in the class prior to May. Participation in real-time events. We have nothing scheduled this week. We do have next Monday the 29th at 9 a.m. Brian and Claire are going to talk about American Airlines joining the debt market. So now you got to say we looked at in another presentation the going concern. And I think we concluded that short term they're a going concern, American Airlines, but long term they didn't seem to be able to make it. Now they've raised debt, so the question is going to be, well, how are they going to repay that debt based on a series of assumptions, which leads us into forecasting as we'll start right after you get done with your project on April 1st. This is how you can join the event at that date. Just as our weekly what's going on in the world, this is a very interesting thing. This came out last week, and this is the growth forecast for 21 and for 22. And as you can see, the blue is Goldman Sachs, and the red is consensus. So what we can see for the full year of 21, Goldman Sachs is figuring a 7% growth. The consensus is 5.5, with the second and the third quarter being really the strongest. But then when you look into the full year going into 22, it looks like it's going to be another bang up year at 5%. So these are all, this range, let's assume it's a range 5.5 to 7, and then a 3.8 to 5.1. That's still growth, and it's higher than what we've been expecting. This is the FOMC, Fed Open Markets Committee, and this just came out. Their growth, they had originally in December, they're forecasting about 4.1. They're now up at about 6.5 and 3.2 in 22, and then dropping down to a more normal 2.1. So I think this is a big change if you look that the Fed is seeing it. If we go back and look at Goldman Sachs, it's consistent. The other one to look at is inflation, where in December they were looking for under 2, and it now looks like it's over 2. I'm still trying to figure out how that is. So that's the latest economic projections, and this becomes important as we move into forecasting. Okay. This is another chart that I saw that was interesting. It's forecast of gasoline consumption, and based on the forecast by the International Energy Association, it does not appear that we will recover to 2019 levels for the use of gas. What's driving that is the electric vehicle fleets, and you can see how the growth is happening in China and Europe and the rest of the world. The U.S. maintains just a slight increase, but if you have that many more electric vehicles replacing gas, your consumption is going to go down. Consumption of gas goes down, that means there's less demand for oil, which conceptually should draw the price down. And we see that in financial statements of major international oil companies. And this, you can take a look at this in the video on one-time items. But oil companies wrote off $105 billion in 2020 as the value of their oil and gas assets. They're not worth it anymore. Okay, so they're writing off. These are impairments of value, and this is really a big topic. But again, when you see how much they've written off, the equity that's been destroyed, this becomes an important thing. And as we look at companies, we want to see what some of these are. So if you have any questions, please let me know.